While being slightly fast-paced, BigBear.ai Holdings Inc., trading under the ticker BBai on the New York Stock Exchange, is currently priced at $6.15, reflecting an intraday gain of 3.74%. The stock is actively trading, and this figure represents a live snapshot of its performance in the current market session. While many investors are captivated by the explosive potential of artificial intelligence and have flocked to names like NVIDIA, the immediate surge in BigBear.ai's stock today might suggest a straightforward bullish narrative. However, the reality of the situation is far more nuanced and complex, demanding a deeper dive beyond the surface-level excitement. The expectation is that any company with AI in its name is on an unstoppable upward trajectory, but the recent performance and underlying financials of BigBear.ai paint a picture of significant volatility and fundamental challenges that every investor needs to comprehend. The common belief surrounding BigBear.ai is that it's a smaller, more agile player in the AI space, poised to capture a significant share of the government and defense sectors, much like a nascent Plantir. This narrative has been fueled by a staggering 281% run-up in the stock over the past year. However, the reality is that BBai's recent journey has been anything but smooth. The stock has experienced a significant pullback since August, driven by a disappointing second-quarter earnings report that sent shockwaves through its investor base. The company reported revenues of $32.5 million, a stark 18% decrease from the same quarter in the previous year. This wasn't an isolated incident. It marked the fourth consecutive quarter of slowing year-over-year revenue growth. The primary culprit was a reduction in volume from certain U.S. Army programs, a critical revenue stream for the company. This immediately challenges the expectation of consistent rapid growth and introduces a significant element of risk tied to its heavy reliance on government contracts. To compound the concerns, management was forced to slash its full-year 2025 revenue guidance from a range of $160 to $180 million down to a more sobering $125 to $140 million. The reason cited was postponed contracts from the U.S. government, raising uncomfortable questions about the appeal and irreplaceability of BigBear's offerings within its core market. The bull case often points to the company's substantial backlog, which stood at an impressive $380 million as of June 30, 2025. On the surface, this appears to be a strong indicator of future revenue. However, a closer inspection of their SEC filings reveals a critical detail that many overlook. The funded portion of this backlog, the part that is authorized and secured, accounts for a mere 4% of the total. This disconnect between the headline backlog number and the secured revenue pipeline is a perfect example of the tension between expectation and reality. It suggests that a significant portion of their future business is not yet guaranteed and is subject to the lengthy and often unpredictable approval processes of government procurement. This is a critical distinction that investors in platforms like Schwab Intelligent Portfolios or those engaging in self-investing through Fidelity or SoFi Invest must understand. The allure of a large backlog can be misleading if it doesn't translate into tangible near-term revenue. The daily trading activity in BigBear.ai stock reflects this underlying uncertainty. While today shows a healthy gain, the stock has been prone to wild swings with significant volume on both up and down days. This volatility is a clear indicator of the market's struggle to price in the competing narratives of immense long-term potential and significant near-term headwinds. Institutional ownership has also seen some interesting shifts. While major players like the Vanguard Group and BlackRock have increased their positions, the very nature of their fund structures often necessitates broad market exposure. The more telling activity can be seen in the options market, where traders are making leveraged bets on the stock's future. This high level of options activity further contributes to the stock's volatility and makes it a riskier proposition for the average retail investor using platforms like Robinhood or interactive brokers who may not have the same risk tolerance or access to sophisticated hedging strategies. So, what exactly does BigBear do? The company provides AI-powered decision intelligence solutions operating in 3 core markets: global supply chains and logistics, autonomous systems, and cybersecurity. It's divided into 2 main segments: cyber and engineering, which offers high-end technology and management consulting, and analytics, which focuses on big data computing and predictive and prescriptive analytics. Their business model primarily revolves around project-based contracts with a heavy concentration on U.S. government agencies. While they are making inroads into the commercial sector, their financial health remains intrinsically linked to government spending cycles and contract awards. This dependence is both a strength and a weakness. On the one hand, government contracts can be large and long-term, providing a degree of revenue visibility. On the other hand, as evidenced by their recent performance, any delays or changes in government priorities can have an immediate and significant negative impact on their top and bottom lines. The company's latest earnings report was a stark reminder of these risks. The net loss for the second quarter ballooned to a staggering $228.6 million, a massive increase from the $14.4 million loss reported in the same period a year ago. This widening loss, coupled with the revenue miss and guidance cut, has led to a flurry of analyst revisions. While the consensus rating among a small group of analysts remains a buy, the price targets are relatively modest, and the accompanying commentary highlights the significant uncertainties facing the company. The comparison to Plantir, a much larger and more established player in the government AI space, is a frequent topic of discussion. While Plantir has demonstrated impressive growth in its U.S. government and commercial segments, BigBear.ai is still struggling to achieve consistent traction. This reality check is crucial for anyone considering an investment in BBai. The expectation of finding the next Plantir is a powerful motivator, but the data suggests that BBai has a long and challenging road ahead before it can even be mentioned in the same breath. Comment below with your thoughts. Do you believe BBai's heavy reliance on government contracts is its biggest strength or its greatest weakness? Looking ahead, the future outlook for BigBear.ai is a tale of 2 competing scenarios. The bullish case hinges on the massive and growing addressable market for AI and data analytics solutions within the defense and intelligence communities. There is a clear and pressing need for the kind of technology that BigBear provides. Recent contract wins, such as the deployment of their enhanced passenger processing solution at Nashville International Airport, demonstrate their ability to secure new business and expand their footprint. Furthermore, the company has a solid cash position, which provides a runway to weather the current storm and invest in growth initiatives. The bulls will argue that the recent stock price decline presents a compelling entry point for long-term investors who are willing to tolerate the near-term volatility. They will point to the potential for large, multi-year government contracts to be awarded, which could dramatically alter the company's growth trajectory. However, the bearish case is equally compelling. The persistent revenue deceleration, widening losses, and reduced guidance are all significant red flags. The heavy dependence on a few key government clients creates a concentration risk that cannot be ignored. The competitive landscape is also intensifying, with larger, better capitalized players vying for the same government contracts. There is a real risk that BBai could get squeezed out by its larger competitors. The uncertainty surrounding the timing and funding of government contracts makes it incredibly difficult to forecast the company's future financial performance with any degree of confidence. This lack of visibility is likely to keep a lid on the stock price until there is clear and convincing evidence of a sustained turnaround. Investors considering a position in BBai through an individual brokerage account must carefully weigh these risks against the potential rewards. In conclusion, the story of Big Bear Holdings Inc. is a classic example of the market's struggle to reconcile lofty expectations with a challenging reality. The allure of the AI sector and the potential for explosive growth have created a powerful narrative that has propelled the stock to incredible heights. However, the underlying financials tell a more cautious tale of a company facing significant near-term headwinds. The recent intraday pop in the stock is a welcome sign for current shareholders, but it does not erase the fundamental challenges that the company must overcome. The path forward for BigBear.ai will be defined by its ability to convert its promising backlog into tangible revenue, diversify its customer base, and demonstrate a clear path to profitability. For now, it remains a high-risk, high-reward proposition, best suited for investors with a long-term time horizon and a healthy appetite for volatility. The expectation of a smooth and rapid ascent has been met with the harsh reality of a company in transition, and it is in this gap between perception and performance that the true investment opportunity or risk lies.